Hi, everyone. I am back. I am back, and I want to talk to you about day trading. I want to talk to you about day trading. I want to show you how do you make money in one day trading, but with plenty of risk. Plenty of risk. Now, this is not for the faint of heart. It is possible to do it, but like everything else in life, either you're lucky, either it takes preparation, or either you are just plain good at it, right? So how do we do this? How do we manage to make that kind of money in one day? 5%, I mean, if it's you're talking about $1,000, we're talking about $50 in one day. In this particular instance, I invested a little bit more than that. But the point is that it is possible. So how do we make money in one day? Okay. The first thing you need to understand is that we're not gonna be working with stocks. We're not working with stocks. We're gonna be working with options. We're gonna be working with short-dated options. We're gonna be working with options under which we understand stocks. Now, one thing I'm going to be doing more and more going forward. I'm going to be more specialized. What do I mean by that? Well, essentially, it's like a doctor, right? I mean, if you are a pediatrician, then you work with kids, right? If you're a gynecologist, you work with women, blah, 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 blah. The point is that you need to be a specialist in something, right? So, how do we do that with the stock market? Well, I hate to tell you, but you need to understand obviously how the market works, the healthcare system basically, but you also need to understand how the stock trades. That is important. How does a stock trades? And you need to understand the credit of the stock. So you don't have to, so basically, you need to make sure you understand the environment that you're in. So on October 4th, the environment that we were in is that we were thinking that maybe there's going to be a recession, and maybe there's going to be some inflation. The Fed just lowered the rates, and we were far away from the election. But now things are different, right? We don't care about the recession. We really don't care about the inflation. We really care. We want to know what the earnings are going to be for the stocks, the S&P result, because all the companies are coming out like this week. Tesla and Boeing and all these guys. That's what the market wants to see. It wants to see, would I correct affording such a high PE ratio? And frankly, we're looking at the election, so it's going to be a lot of volatility. But on October 4th, that was none of that. We were mostly focused on these concerns, but they were kind of evaded at that point. We were not too concerned about the recession, some concerns, but the numbers coming out were okay. So I didn't have to worry about the stock movement, but the market movement pushing the stock. The company itself, GCT, I mean, look at it. I gave you some good information before in previous video. They do a giga technology for business to business. So it's a good business, and they've done some great earnings. So the company is doing great from a credit and financial perspective. So that was fantastic. That was good. The thing is now, how do you make money on something like that? Well, what we do is, let's go back to the chart, because I think you need to see the chart, understand the chart, right? It was kind of trading like this before, right? That's how it was trading, just like that. As you can see, on October 3rd, it was kind of on its way down and on its way up. If you look again, you see this pattern up and down and up and down, but on its way up. At this October 3rd, I felt, look at this, look at this. Now, what am I doing here? Look at this up and down. Well, basically, I am trying to predict where the stock is going to go purely on the way it went, what it did in the past. What kind of craziness is that? Well, think about it. First of all, I have to tell you, I hate to tell you, there is a little or small, there's a very little amount of correlation between the way the stock behaves and the way the credit behaves, right? There's something else going on. Because if it was, hold on, let me explain to you. I mean, basically, earnings are released every quarters. So, by the time you release the quarter, you have the release on March 31st, March, April, May, June. So you have 3 months. What do you think is going to happen here? Nothing. You have no news at all, right? So the name is going to trade, but based on the expectation of what's going to come out, not what has come out. I mean, take a look at what happened with Nvidia, right? Everything doubled, and yet the stock tanked. And now, for some reason, the stock is back up. Nothing to do with the news itself about how the company is doing, right? So, because we don't have information coming out of the stock every seconds, it's all about expectation. Something else is driving the stock, right? So the way we look at this chart, what we're basically going to say is we're going to say that let's look at the pattern of GCT historically. We also take some cues from, the RCI, the RSI, basically. And whenever the RSI is above 70, it means that it's in an overbought position. So the stock is going to collapse, which is what's going to happen, right? We bought too much of the stock. Um, and well, anyway, let's not talk about the RCI because that's going to be too confusing for you. Let's just talk about the pattern. So look at the pattern. And then, so on the 4th, I decided, you know what? Bam. Huge increase. 4th. What do you do? Well, I bought a call. Let me share with you. Let me share with you my library of my Patreon library, right? So the Patreon library, basically what I have in there is that technical analysis, morning market, trading. So if I go under trading, right, and I go to, these are all the trades that I've been doing, blah, blah, blah. If I go to October 4th and I look my 5% in one day right here, as you could see, right, I invested $2,100 and I sold $2,300. Simple as that, right? And by the way, don't forget, subscribe to this channel, subscribe to Patreon as well. It's a great way for you to see my trades, to see my morning commentary, to think the way I'm thinking, okay? So if I go back to the chart, what happened is we basically had an increase. And this was my thinking, right? I figured, well, I'm here in time. I'm back in time here. Look at this. Anyway, so the stock did this. I bought right around the clock, right? It's around 10 a.m. And of course, it took a dive, but it go up and down. The trade above the 50-day moving average. And then it started to go back up and go back up. As it goes back up, something happened as a trader, right? You tend to be greedy. You tend to, at this point around that time, I was making about $200. And I said, wow, you know what? It's enough for a day's work. And I sold. Unfortunately, I should have listened to my instinct because it kept on going and going and going and going and going. So here I made around $200. There I made $1,000 in one day. Right? Actually, no, this is the 4th. Yes, it was Friday. So it opened and then it started coming down the next day. And since then, remember, it was $29, right? And since then, it's been, look at this, look at this, look at this. We're down to, it kind of back up again, but it went down again. 20, and it's been a massacre. I tried to reproduce it, but I was. So now basically I'm waiting for it to go back to $29 to catch up on some additional calls. So what are we saying here? We're saying several things. The first thing is you trade really understanding what's going on with the stock itself, right? This is literally learning the patterns. Like for me right now, I know that at 25, this thing is way too cheap. This, with what's happening in the market right now, with the idea that uh, prices are going to, rates are going to go down, which is going to be a very good thing, a very good thing for small stocks. This thing is going to explode very soon. Okay, but it depends, especially if, when the earnings are going to come out. That's going to be a very good thing. So, but you also need to understand what the company does. You need to make sure you understand the financials of the company. You really need to make sure that you understand your product, because the more you learn, right, the more it's easier to predict because you see how it behaves. You know, why the stock was doing so great at $29, now it's been dropping, and yet there's been no news. Well, the story has changed in the market a bit, right? There was some concern about small stocks, right? There was some concern about the market being overbought, right? And this seems to be abating, but basically the market, and it's a volatile stock, so the market is saying, you know, show me the earnings, show me what's happening. And frankly, everything is still on the Magnificent Seven. I mean, look at Nvidia, right? It's ridiculous, but it's a big, huge portion of the S&P 500 in terms of earnings. Why are they focusing on this stock? Why are they not? I mean, don't forget, GCT is a P ratio, is very small. But you know what? It's beautiful because you want to buy when everybody else is selling. You want to do your thing when everybody else is looking. You don't want to be with everybody else, right? Because then there's no secret. The secret is out. It's okay. Make $200 a year, $100 a year, $300. It's okay. You could make a little bit of money here and there, right? So the point is you want to be able to focus on one stock, two stocks, maybe three stocks so you understand them well. But don't go out and being a big cowboy and yowing all over the place because you're going to be disappointed. So the lesson is that is how you make 5% in one day. Options, know your name, know your credit, follow it, be ready, and act on it. 5% in one day, there's 250 trading day in the year. 250 times 5, that is about 1,200% a year annualized. It's not too bad. Take that to the bank.